All right, so just want to make a quick video, guys, reiterating why I think it's bullish. Okay, so I'm going to talk about a technical reason why I think it's bullish, and then a fundamental reason why I think it's bullish, and then also a bit of like betting speculation reason. So I'm going to try to give you 3 reasons why I think the market's going to go up. So first reason, if this is just very characteristic of what a market looks like when it's coming out of a recession, right? Now, we did take out sell stops there, or buy stops there, excuse me, but and so there's a bit of a sell-off happening right now. I just don't think it's going to last very long, right? It will probably go a bit lower than this, to be honest, but I'm just going to keep buying. So yeah, if you just look at recessions, when stocks come out of recessions, it kind of catches people off guard, and it usually happens kind of quickly. Why? Because they don't want retail piling into long positions to get in on the move, right? It just keeps going up, though. It doesn't always have to happen quickly, but as you can see here, there's a recession from the Bitcoin crash or whatever, or that was a little bit after the Bitcoin crash. I guess this was the Bitcoin crash, but a bit of a recession here, and then what happens? It comes out of it pretty quickly with not a lot of retracement, right? Because they don't want to pay out retail who's like trying to short the market, correct? So that's just pretty characteristic. Now, I'm not saying there can't be a second leg of a recession, and even this time, I guess there technically could be, but if the news is promoting, now let's get into the fundamental, if the news, which is paid by the investment institutions and financial institutions and, you know, owned by the rich people who need losing trades on the other side of their winning trades, if the news is promoting a bearish sentiment and always trying to scare people back into thinking like the next leg's coming, it's probably not going to happen, right? If they weren't saying that so much and they were just like pushing a bullish narrative, I would be more skeptical and think, okay, we could be coming for a second leg of the recession. But until I see a super bullish narrative, I don't get sus about or suspicious about higher prices. So technically they tend to come out pretty quickly. Sometimes there's a little bit of retracement, but it's not when they're expecting retracements. I'll tell you that. Okay, now also fundamentals, besides just saying where banks are betting and where they need losing bets. Just remember what the NASDAQ and S&P 500 and the Dow Jones Industrial Average are. They're a hedge against inflation. These instruments exist to hedge specifically. They exist specifically to hedge against inflation, because if you look at a chart of the purchasing power of the dollar since 1776, it just depreciates, right? That's what inflation is. You keep printing more currency, the purchasing power goes down. But why would they even do that? They create these recessions, they engineer this stuff, they keep all the the smoke and mirrors. Why are they actually doing it? It's a wealth siphon tool, right? They make cash devalued, so everyone who holds their assets in cash, their wealth in cash, gets poorer, but because money itself wealth can't be really created or destroyed, it can only be transferred. What it does is it transfers the wealth from cash to an inversely correlated asset, aka like the NASDAQ or the S&P 500 or anything that has a long bias, right? So this is a hedge against inflation. So why do recessions happen? Well, they have to knock out retail. People who want to come in along for the ride, the long-term ride, they have to scare people out, because most people aren't trying to build generational wealth or maintain generational wealth the way like the top 1% is doing, right? They're trying to like make their quick money over like 3 to 5 years and get out. And so they build the market structure in such a way that someone who's trying to get rich in like 5 years, unless they really know what they're doing, they're not going to be able to do it, especially if they don't understand the purpose of a recession. Right? The purpose of a recession is to take out sell stops, right? It's to force people to sell for a loss in a long biased market, right? Trying to put people in a drawdown on their long positions, take them out for a loss, make the difference on that, and then also scoop up the asset at a discount before the prices rip higher, right? So they have to do everything they can to keep retail from understanding that. That's the whole purpose of the news, okay? So anyway, not only that, we have the Michael S. Jenkins 2,339-day market cycle that it iterated at the end of 2021. So we knew that this was a recession, but we also know that it's ripping out of it so hard. It's ripping so hard out of it, guys. I've been in long since like here. I was even thinking about getting in long, like I was planning on getting in long here, but my finances weren't in a place where I actually was like felt comfortable doing it in case I was wrong. But once I saw that I was actually correct with my prediction that October would be the low of the bear market, and I predicted that back around here. I wasn't making videos back then, so you don't have to you don't have to take my word for it. But I was estimating that a bear market this year would probably last till around October, and I was like spot on. So I don't know how I pulled that off, but I wish I'd bet more on it. But I'm betting on it now. I've been betting on it now. I've been adding to my position through as we go up, as the market goes up. Sorry. But yeah, so 2,339-day market cycle, we knew from Michael S. Jenkins that was a recession, but now it's pretty obvious to me that it's been coming out of it since October. And in case you don't believe about the 2,339-day market cycle, it last iterated here at this top. It iterated in March of 2009, right at the bottom of the recession, and then it also iterated at the very bottom. I'm talking about to the final day. So I know this is a lower low over here, but the final low, not the lowest low, but the final low of in time of the 2007 to 2009 recession, to the day it was on it. I'm just on a weekly chart. It also was to the day on the .com low. It was like October 10th or something. I forget the exact date because I'm not looking. I haven't looked it up recently, but you get what I'm saying. You can look it up yourself. Just take December 25th, 2021, which is right there, and subtract increments of 2,339 days from it. And you can take it all the way back to the Great Depression back in the 30s, and it's only off by like a month, but it's often very close to major highs and lows in the market. But anyway, so that was another reason I knew there was going to be a recession, but recessions don't typically last too long. Why? Because it's a hedge against inflation. The market's, this instrument is a hedge against inflation, so it can't just collapse completely, right? It collapses quickly, but it also recovers quickly. So the people in the know get out at the top of a bull peak, and then maybe they take short positions during a recession, but the majority of interest from the wealthy people is going in long and trying to get a good timing on the market. And so if you read the news, you'll know when the good timing is. When everyone's spreading fear, that's a good time to buy. And when everyone's like euphoric and things like NFTs are being made, that's usually the end of a bull market, right? Anyway, okay, now that I've said all that, that's all said and done. Now let's talk about a conceptual from a betting, like think about a bookmaker perspective. Okay, what opinions do you usually see? And I'm not just talking about the news, but if you look at Wall Street Bets, you look on Facebook, you just look in communities of people who are trading. What are people betting on? They're betting on like a imminent collapse, a slow collapse, a bunch of sideways stuff, right? There's very few people, however, betting that the market will just continue ripping, right? So where am I placing my bet? Well, if the rich really do manipulate the markets, that means that they're going to take it in a direction where the least amount of retail is betting, correct? So because that's the least, that they don't have to share the profits as much, right? And they don't have to pay anybody out if they have it. Well, they were not going to have a short position, right? If the market's going to go up, but they're not going to have to share the profits with someone who's also right, correct? So this is the rarest bet. This is the least popular opinion. And from what I've learned about markets, it's usually the least popular opinion that's correct. Not always, but usually in the long run. Sometimes a very popular opinion will be correct. Like for example, there were articles recently talking about how unknown unknowns, I said it in my previous video, we're going to take the market lower. And yes, they're doing that, but it's not. You have to understand the bigger game plan here. In my opinion, it's not that that's actually what's happening. What's happening is they're inviting in shorts, scaring people out of long positions before another leg up. Okay, so yeah, when you see fear hit the news, if you want to react to that quickly with like a short-term puts and stuff, go for it. But also just know that you're not going to be completely correct all the time, because sometimes it's just going to rip instantly. Like I'm sure there was a bearish article somewhere here, and I doubt any financial play to the downside made any money here or here, right? But sometimes you'll be right. Like during the bank panic, you could have shorted and made some money, but it wasn't like it's not like Michael Burry type, the big short, right? He even corrected himself on his short position. He said sell, and I was questioning that. I was like, I understand a bank panic could be bad, but he was saying sell, and I was skeptical of that. And then he corrected it to buy, and I was like, yes, okay, now he gets it. Okay, he gets it. It is a bull market. So, but anyway, yeah, that's about all I have to say, guys. Just let me know what you think. This, to me, is just the smartest, most lucrative bet. Think about how many people you'll be sharing profits with if these things play out. Think about how many people you'll be sharing profits with if this plays out. There's almost no retail betting here, right? This is where retail's betting. This is where retail's betting. This is where retail's betting, right? So yeah, just think about that, guys. Let me know what you think. Take care.